The economic crisis of 2008 was a severe financial downturn that occurred in the United States and other countries around the world. It was caused by a combination of economic and financial factors, including a housing market collapse, subprime mortgage crisis, rising levels of personal debt, and bank failures. The housing market collapse of 2007 to 2008 was caused by a combination of factors, including a bubble in the housing market, over-leveraging by banks, and predatory lending practices. Home prices had been rising rapidly in the years leading up to the crisis, but when the bubble burst, home values plummeted and the housing market crashed. The subprime mortgage crisis was a result of banks investing in mortgages for borrowers with weak or poor credit histories. These mortgages had high interest rates and high fees, making them difficult for borrowers to pay back. As a result, many borrowers defaulted on their loans, leading to a wave of foreclosures that further weakened the housing market and the economy. The high levels of personal debt in the U.S. were also a factor in the crisis. Many individuals were taking on more debt than they could handle, and when the economy began to weaken, they were unable to pay off their loans. This led to a wave of bankruptcies and further weakened the economy. Finally, the banking system was also a major factor in the crisis. Banks were taking on more risk than they could handle and were lending money to borrowers who could not pay it back. As a result, many banks failed, leading to a wave of bank failures that weakened the economy even further. The economic crisis of 2008 had a significant impact on the global economy. It led to a severe recession, with high levels of unemployment, rising poverty levels, and a sharp decline in economic growth. The crisis also resulted in the implementation of several government programs to help the economy recover and prevent future crises.